1.4 billion kilos of instant coffee is consumed across the world in a year,
Yes.
right?
As of 2025.
Obviously, this is a clear indication, right, that instant coffee is not a dying industry. In fact, if anything, it's on the rise.
Yes.
Hello and welcome to yet another episode of Taking Stock. This is a weekly podcast where every week we pick one company, one stock, and we deep dive into it. Today I'm joined by Wealth Manager from Paterson, Mr. Pratik. Nice to have you.
Yes, thank you for having me.
So this week, the company we're going to dive right in, as we always do. The company this week that we're going to talk about is an instant coffee company called Vintage Coffee, right?
Vintage Coffee and
Vintage
Beverages.
Coffee.
Yes.
They are based out of Hyderabad. And I was just reading this stat, right, which is actually very fascinating, that, most of us privileged or whatever you want to call us, privileged folk, urban folk, we are sort of in the mindset, all these cafes and, everybody going crazy about coffee machines and coffee beans and all of this. The assumption I would have in my mind is that artisanal coffee or fancy coffee is on the rise and instant coffee is on the downfall. Right. But I read the stat, which is obviously the opposite of my thought, which says that 1.4 billion kilos of instant coffee is consumed across the world in a year.
Yes.
Right. So this is a ridiculous.
This is, I think, as of 2025.
So there's still 2 months or whatever, 1.5 months to go from the time of recording. Right. But so obviously this is a clear indication, right, that instant coffee is not a dying industry. In fact, if anything, it's on the rise.
Yes.
Right. So what is, if you can explain a little bit about what is the instant coffee industry, and secondly, if you look at vintage isn't a household name. If you talk about instant coffee, the first thing that comes to your mind is maybe a Nescafe or a Brew or one of those, right? So how is the instant coffee industry still growing?
Yeah, so even for me, vintage is a new name. And while researching about this company, I went through the entire instant coffee industry chain. So I'll just, give some context to set some context. We'll just talk about the coffee industry in general first, and then we'll see where vintage fits in the
Fair enough.
So, a fun fact. So coffee is the second most consumed beverage after water.
Oh, water.
After water.
Okay.
Yeah.
So it's more than tea.
Yes, it's more than tea.
Okay.
Yes, globally.
Fair enough.
So your coffee can be divided into two types. One, I think, which you have already mentioned. So one is your artisanal coffee.
Correct.
And the second is your instant coffee.
Correct.
So artisanal coffee is everything, which you'll see in your cafes, your roasted beans, your freshly
single
roasted
origin,
beans.
single estate,
Espressos.
all the big words,
So basically it is more premium, flavor driven, and it focuses more on your freshness, craftsmanship.
Right.
So basically the volume will be less, but the value will be higher.
So artisanal coffee, essentially, from what I understand, is that when you buy beans from a particular brand or an estate, right? And those beans are ground right before you have your coffee.
Before you, yes.
Right?
And that is why. So the taste also depends on how fresh your bean is.
Correct.
And hence it gets such a premium, or it commands higher margins.
Understood.
But instant coffee, on the other hand, so people who have just started their jobs, are still in college, they'll consume this more because it's very convenient.
This is also instant coffee only.
Yeah, so basically you are very busy.
Yeah, clearly.
Yes, and it is growing in the emerging markets. So markets like India, your Southeast Asia, your African markets.
Correct.
And there. So basically what happens is your coffees are brewed at a large scale in factory, then they're dried, and then they are converted into your powders or granules. So this particular market is growing 6 to 7% annually.
So you're essentially saying that instant coffee is basically a very convenient drink.
Yes.
Right? The major selling point, obviously on a taste level or on a freshness level, artisanal coffee will always be better, right? And it's premium at the end of the day. But this is a budget alternative, and its USPs are that it's quick, it's easy, it's convenient, doesn't require a lot of things, right? That's the basic USP of instant coffee.
Taste will be not at par with your artisanal coffee, but then when it comes to convenience, you will always prefer.
And coffee is a common person's drink, right? It's not a fancy drink that you only have on an occasion or sorts.
Exactly.
Right.
So that, and because of these So it's not basically that, your brands, your cafes are rising, so instant coffee is dying. It's not. But globally, I think, as you mentioned, 1.3, 1.4 billion kilos
Correct.
of instant coffee is consumed, and your leader is your Nescafe.
Correct.
And you'll see 70% of, I think, retail is captured by Nescafe as of now.
Okay.
And then behind them, there are players who are not directly exposed to the consumers, but those B2B players who do private labeling.
Correct.
Yeah, so there comes in your vintage or a company like CCL, which is the leader here in India.
So what's CCL?
Continental Coffee.
Continental Coffee. Okay.
Yeah.
Fair enough. This episode of Taking Stock is brought to you by Paterson. So, okay, so what is the difference between instant coffee? I'm assuming it's the process, because the coffee we're getting is not as fresh. You're not getting beans delivered to your home. But when we order instant coffee, thanks to our low budget podcast, but when we order instant coffee, the idea is that it comes to you in a jar. It's already sort of powdered or granulated, or it's in a different form than beans, right?
Yes.
So I'm assuming it's cheaper because the process is more efficient.
Yes, so I'll get to that. So your instant coffee also comes into three parts.
Okay.
So your first part is the spray dried coffee,
Okay.
which is the most common and the most cheapest form of your instant coffee.
Fair
So I'll
enough.
just explain you what spray dried coffee is. So basically your liquid coffee, after your beans are grinded and you brew it, basically get it in liquid form.
Right.
You keep that liquid coffee in a controlled setup, and then through nozzles you spray in hot air.
Okay.
And
so it dries up.
Yeah, it dries up instantly, and then it produces that fine powder.
Understood.
And hence it turns into that fine powder.
Understood.
But the problem with your spray dried coffee is the aroma won't be the same. It will be at a lower end. The taste will be compromised.
So the process is what takes away the aroma and the taste. Right.
Even though it's very convenient, cheaper than other sources, but then the problem comes with the taste, your aroma.
Correct.
Then the second type is a agglomerated coffee.
Okay.
Which is again a type of spray dried coffee, and you can say a byproduct of spray dried coffee. Because what happens is, in agglomerated, once you dry the coffee, so it's a very fine powder, and because of that there's no aroma, as we discussed.
Correct.
But in agglomerated, what happens is you again throw some moisture on that powder and you make it into granules.
Okay.
So that granules capture the aroma at a much better level.
Okay.
And hence,
so it is compromised, but not as much as spray dried coffee. Okay.
So, and that is your agglomerated coffee. But now the third, and which is the most premium out of the lot, is your freeze dried coffee.
Okay.
So in this, again, your coffee is brewed, but then it is frozen.
Okay.
And then it is put in a vacuum.
Right.
So, and then when they heat it up, so what they do is your ice effectively directly converts into vapor, and there's no water.
Okay.
So what you're left with, those tiny lumps of coffee, and in that process you don't lose your aroma, you don't lose your taste. So it's essentially original, almost at par.
Understood. So out of the instant coffee levels, this is the premium one, the freeze dried coffee.
Yeah.
Okay, fair enough.
And these carry your 30 to 40% higher margins as well.
Right.
And it is also expensive to get those machines, those equipment.
Correct.
In India, there are a few manufacturers who have those freeze dried plants, but your majority of your freeze dried plants are then you need to get them from Europe. So that whole process is
understood.
Long.
So now I was just reading through our research, right? And what I saw is that vintage coffee, the stock for vintage coffee has gone up by close to 40 or 42% this year, right? So obviously, and from what I understand, they are purely in the instant coffee space, right?
Yes.
Now, we've already established that what instant coffee is, how instant coffee is a growing industry, and there's obviously massive consumption across the world. So specifically for vintage, they're obviously doing something right, that the stock's gone up by 42%.
Yes.
Correct? So, I mean, tell me a little bit about vintage first of all. I think for everybody who's not heard of vintage.
Yeah, so again, vintage is not your quintessential FMCG company.
Correct.
You won't see its name anywhere.
Right.
So, but I'll just start with the history, because I think this is a very promoter-led company. So you need to know about the promoter.
Right.
So the promoter is Balakrishna Tatti.
Okay.
And he has an experience of around 30 years in the coffee industry.
Okay.
So he was earlier heading the operations at Tata Coffee.
Okay.
And he grew the sales for Tata Company by 17x during his tenure.
Right.
And so after that, I think he went to another coffee company, again helped them set up your base, but then eventually he wanted to do something of his own. But the problem was he didn't have capital.
Okay.
So
to set up the coffee manufacturing or whatever, coffee processing. Yeah.
So to do that, what he did was in 2008 he started exporting gherkins.
Okay.
Your pickles. Your pickled cucumbers kind of a thing. So and it is a low capex business, but you get a lot of cash.
Right.
So I think for nearly around 7 to 8 years he did this business, and once he had that sufficient amount of capital, he then went for his coffee business. So in 2016, Vintage Coffee was found.
Okay, fair enough.
And I think the first plant which they had was for instant shikari coffee.
Okay.
So shikari is non-caffeinated, but non-caffeinated coffee, it can be a substitute.
Right.
So you add it
to like a decaf?
Decaf. Okay. You add it to your coffee to give it a better texture, to give it...
Right.
So so they started with that. And then in 2019, the company began its commercial production with the instant coffee.
Okay.
So
they set up their own plant and everything. Yeah. Okay.
So by 2019, it was set up. So now again, so as we discussed, Vintage is a B2B private label manufacturer, and it is only into instant coffee as of now. And it supplies to your retailers, your other FMCG companies, supermarkets, and they do not have a brand as of now.
Right.
So what happens is in that case, you'll have more efficiency, more quality, and you'll earn better margins at the EBITDA level. Why? Because you don't have any advertising cost, no brand building expense, no distribution.
So essentially, okay, so just to understand, right, and I'm trying to sort of simplify this, is Vintage has their own sort of coffee processing plants.
Yes.
Which instant coffee? So they are into spray dried coffee?
Yes.
The cheapest one?
So they are into spray dried coffee only as of now. Right. Spray dried and your agglomerated.
Okay. So what they essentially do is they get their coffee beans from XYZ estates. They'll process it into your spray dried instant coffee, and it is then sold to coffee retailers.
Retailers, yes.
Right. But the retailers will put it out to the consumer under their brand.
Their brand.
Understood. Makes sense now. This episode of Taking Stock is brought to you by Paterson.
Yes. So, and at the same time, so, they are into spray dried, they are into agglomerated. So I think as of now, their capacity is at around 6,500 metric tons per annum.
Right.
And it was at 4,500 last year, but then they did a minimal capex of, I think, on 45 crores to get this capacity to 6,500.
Okay.
And within that also, so your 45% of volumes are your spray dried coffee.
Right.
And the rest, which is 55%, is agglomerated.
Understood.
Yeah. So
makes sense. And I'm assuming the stock's growing, right? Or the stock's grown by 42% is because one, they have, I think from what I understand, they have already maxed out their capacity, right? Their orders are already maxing out their capacity, and they have big plans of expansion as well.
Yes.
So what do you think Vintage is doing now in the next few years?
So again, as we mentioned that they had to increase their capacity to cater their customers.
Right.
Even after increasing the capacity, they are at 99 to 100% of utilization.
Right.
So there's this, now they can't find a room to, try and get in more production on the same plant. So now what the company is doing is, so I think by the end of FY26, they're adding another 4,500 metric ton of spray dried coffee plant.
Okay.
Yeah. So it should be operational by FY26, which is March 2026.
Right.
And in certain cases, what usually happens is your volumes won't really, your utilization won't be there. But in this case, the
orders are already there. So they're just fulfilling the orders.
So in the first month itself, your utilizations will be at a level of, I think, around 70 to 80%. And by the second month, you will see this new capacity also
getting maxed out. Correct.
Yes.
Correct.
And other than this, so as we talked about the premium segment, the FDC, which is now, getting popular.
FDC is freeze-dried.
Freeze-dried. So they are getting into that also. And they're putting in a significant investment.
So that is so the spray-dried coffee plant and the freeze-dried coffee plants have to be two separate
separate. They are not fungible. Because they're drying and then extraction processes.
So this is going to be again a slightly capex heavy investment.
So the capex amount is at around 450 crores, which is higher than the sales.
Correct.
more than the sales
Right.
of FY25.
Right.
So, and what they're doing is, I think they recently raised capital also, equity
Right.
capital in, I think, July 2025, around 215 crores
Right.
for this capex, and the balance will be funded by your debt.
Correct.
Yes. So now,
So this can turn out to be an extremely risky
yeah.
move,
So
right?
the entire thesis or what market is watching is how they will execute this.
Right.
And the entire story of Vintage sort of hinges on their FDC plant.
Understood. Understood.
Yeah. And secondly, I think what the viewers need to know here is that Vintage has one of the greatest strengths of Vintage is their raw material price volatility. So how they handle that volatility?
Right. Because coffee prices keep fluctuating. Correct.
Your weather changes,
Right.
and it's mainly in Brazil and Vietnam. So
Right.
Brazil is your major producer for Arabica coffee,
Right.
which is more premium, and Vietnam is known for Robusta,
Understood.
which is your, how do I
Not
say?
so premium?
Not so premium, yeah, but decent.
Okay.
Yeah, and it works well in your instant coffee.
Makes
Yeah,
sense.
mass
Makes
product.
Makes
And
sense.
so what they do now here is, earlier they used to sign your short-term contracts, volume contracts, but now what they've done is they have started signing annual contracts with customers, and they already know how much volume each customer is going to need in a particular year.
Okay.
And because of them knowing how much volume and when will they procure, so they keep the pricing open on a quarterly basis. So
Okay.
your volume is fixed on an annual basis,
Right.
but pricing is on a quarterly basis, on a
Right.
short-term period. So
Correct,
basically,
correct.
then even if there is a huge swing,
They won't get
they
affected
won't
so
get
much.
affected.
Right. Right.
Their sales will be affected because the price of the coffee will
Right.
fall, but their margins and realizations will be intact.
Understood. So this is what they've sort of done as a mechanism to protect themselves
Yes.
from the coffee price fluctuations that happen. So okay. I mean, from whatever we've spoken about, right? I think everything sort of looks positive, and obviously there's a lot of eyes and a lot of spotlight, I would say, on the fact that how are they going to execute their expansion into freeze-dried coffee, which is, again, I mean, from what I'm assuming is that it's not like they're going into a completely new space. It's just that they're coming up with a slightly premium level of a product,
Premium.
right?
So yeah, they already have the know-how because
Correct.
30 years of experience of the promoter,
Right.
and then they have their marketing or CEO is also CEO head.
Right.
The CEO of the company is also
Right.
was also in the coffee industry.
Right.
He also has like 20-25 years of experience.
Right, makes sense. This episode of Taking Stock is brought to you by Paterson. So okay, so let's look at the numbers now, right? What does Vintage look like from a profitability standpoint, and then maybe post that we can move on to the valuations also.
No problem. Yeah. So I think in FY24 they posted revenues of around, I think, 130 crores, which jumped to 309 crores in FY25.
Okay.
Yeah, and this was mainly because of so recently last year there was drought in both Brazil and Vietnam, and the coffee prices shot up by 50 to 60%.
Okay.
So because of that swing, the revenues also shot up very quickly. And now what is happening that when we come to the gross margin levels, the gross margins are very low here, which is not the case with CCL. So CCL operates at around 40-41% gross margin level, but your Vintage operates at around 28 to 29%.
Right.
Now this difference is because your Vintage is only into B2B.
Okay.
But CCL also has their own consumer brand.
Correct.
So there the margins and the realizations are a bit higher, and hence their gross margin profitability is much better.
Right.
But what's interesting is your EBITDA margins for Vintage are higher than CCL.
Okay.
And that is only because of operational efficiency of Vintage, because CCL has to incur your branding,
marketing,
expenses.
all of those expenses.
Yeah.
Correct.
So your Vintage takes forward when it comes to EBITDA, and their EBITDA per kilo is also much better than CCL. So Vintage operates at around 135 to 140 rupees per kilo of EBITDA, whereas CCL is in the range of 100 to 110 rupees per kilo of EBITDA.
Understood. So what is currently, let's say in this year or last year or whatever, what was Vintage Coffee's revenue and profits look like?
So last year, I think revenue, as I told you, it was 130 crores. This year it jumped to around 309 crores.
Right, correct.
Yeah. And then your profits were in the range of 20 to 30 crores, which will now jump to 43 crores in FY25.
Right.
So again, the profits almost doubled for them.
Understood. right? And how is this? So the stock's obviously been up, right? Which means the basic sentiment is
Positive as of now.
all positive, right? So what do you feel in terms of the valuations of the company?
So currently, the company is trading at around 18 times FY27 PE.
Right.
And at the same time, CCL is trading at around 24 times FY27 PE.
Right.
Now, clearly, there is a 25% discount when it comes for
Correct.
your vintages valuations.
Right.
And there are reasons for that. Number one being CCL has a 30-year experience, and they have
Correct.
so they have seen all those down cycles and up cycles.
Right.
But vintage here hasn't seen
Right.
any of the cycles. They have just recently started, and coffee market has been good for all these companies in the recent years.
Right.
So market needs to track how will they execute, how are the promoters.
Right.
So that is one thing. Secondly, vintage is, I think, at a very nascent stage. Their revenue was, I think, around 300 crores, right?
Right.
But CCL is at 3,100 crores
Correct,
of revenue.
correct,
so that
correct.
scale is also important.
Right.
And after so many years, they have been able to maintain their margins at a certain level.
Right.
So we need to see if vintage will be able to maintain
Continue doing that.
continue to maintain
Right.
that margins or not. So that is one factor. And then secondly, everything now, there is also this thing called execution risk. So market
For the freeze-dried coffee, right.
Yeah. So now this is a very heavy capex heavy thing, right? 450 crores you are
Correct.
spending, out of which
Right.
you are taking debt also and raising capital.
Right.
And at the same time, what the promoters have done is they've pledged their shares.
Okay.
So they've taken loan against their shares.
Right.
So again, that is a concern.
Correct.
At the same time, you are raising capital,
Right.
and then you are also putting your shares
on.
pledge.
Yeah.
So all these things have led to this discount.
Right.
But now, what could happen here is if they are able to execute it well. So by 26 they get their capacity to 11,000 tons, and
Right.
then 5,000 tons they add by FY27.
Right.
So FY28 could be a game changer for them,
Right.
wherein again they have customers, so their revenues, your margins will also increase because your
Correct.
freeze ride will start coming in.
Right.
kicking in. So I think
So it'll
they
get you a slightly premium margin on that.
slightly
Yeah.
premium margin. So because of that, what could happen is there could be a re-rating for the company, at least to the CCL's valuation. So
Understood.
if the company is currently at 18x, if everything goes well, it could reach the 24-25x mark where
Right.
CCL is.
But you're saying this is
right
by
now.
FY28.
FY27, FY28. Yeah. So the
28. Yeah.
if signs are good, if for example the management is able to fast track its plant,
Right. So
It might sort of early
a lot
also.
of it essentially depends on this, how the execution of this expansion happens. And second, once the expansion is done, can they sort of fulfill that capacity also?
Yes.
Right? Or can they fill up their capacity?
fill up their capacity, and are they able to maintain those margins or not?
Makes
Because
sense.
what will happen is by FY27, by FY28, you will have accumulated around 200-300 crores of debt also because
Right.
of this capex. So then interest payments will also come in. So
Correct,
it
correct.
will start affecting their profitability.
Right.
Because right now there is no such interest payments. It's essentially a very debt-free company as
Right,
of now.
right,
Because they
right.
have just been raising capital, equity in the form of equity.
Correct. Correct.
So yeah.
Makes sense. Okay. Sounds good. This episode of Taking Stock is brought to you by Paterson. Okay, now let's move on to our community question for the week. So for everybody who doesn't have context, every week from all of our social platforms, people write in their financial wealth related questions and we pick one question and answer it on the podcast. This week, we've got Mansi Chaudhary from Jaipur who's asked us a question, which Pratik's obviously going to answer. How often should I give attention to my stock portfolio? I'm a working woman and do not have the time to do it on a day-to-day basis, right? And I'm assuming this is obviously a question that I'm assuming a lot of people would have, right? That people are busy, people are traveling, people are busy with their work. They obviously don't have the time to track their stocks and portfolio every single day. So how often should somebody check their portfolio?
So basically, my job here at Paterson is to review portfolio for
Right.
clients and give them
Right.
actionable insights. So what?
Mansi, if you need a portfolio to be reviewed, you know where to call.
So yeah, what I personally tell my clients or whoever's portfolio I'm reviewing, even the prospective client, what I say, you should get your portfolio reviewed once every 6 months.
Okay.
And the reason behind this is, so your goals will keep changing, because when you're working, you'll have your short-term goals, you'll have something
Right.
planned, you'll need funds for an emergency situation.
Correct.
So you can't, and as she said that she's a working woman,
Right.
she can't keep track of it and how to change her portfolio. she could get her portfolio reviewed, and then on a 6-month basis or a half yearly basis,
Right.
and then she could get those insights that
Understood.
now my goal is this, so my portfolio should now be positioned in this particular
So
manner.
essentially what you're saying is, and correct me if I'm wrong, right? Essentially what you're saying is that if she has the know-how and has the sort of knowledge of her stocks and a portfolio, she can review it herself every 6 months.
Yes.
If she doesn't, probably go to an expert and get it reviewed. Now that expert could be a financial organization, it could be a friend, it could be somebody who understands.
But you should get your portfolio
reviewed. It's
every
like
6
a health
months.
checkup,
Yes.
basically, right? You
Yes.
get a blood test done every
Yeah.
6 months to see what's going on. Okay, great. Hope that answers your question, Mansi. Anyway, thanks a lot for listening. Please like, share, subscribe, do your thing. Let us know in the comments which stocks you'd like us to cover. We come up with new podcasts every Tuesday, and we'll see you next week.
Thank
Thanks.
you.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.